All right, good morning, or good afternoon, I should say. Thank you guys so much for watching today's video. Today's video is going to be over the trade recaps for September 3rd, 2024 trading day, and yeah, let's get right into it. So, I was able to take a total of 2 total trades today, and one of them being a winner and the other one being a loser. So, I took full size on my first initial entry, and the second entry I took half size. So let's go over the trades I took today. So first thing is I do want to note out how or where we look like during the morning session here. So before I even before that massive move down where we moved about I think 636 points lower here, I already noted out how we had SMTs here at the highs with ES. So ES, we had taken out previous month's high. So let me show you guys what the ES chart looked like. So this is ES chart right here, and I want to show you and take a look at where ES is. So ES took out previous month's high, right? We swept previous month's high, and then we started to show willingness to go trade high or lower. So after I noticed how we had that SMT between ES and NQ, I noted out, okay, so if we are to remain bearish here, and if we are going to continue this price move lower, this SMT high needs to hold. So during the Asian and London session today, actually, we took out previous day high. So previous day high, so let's go back just a little bit here. So based on this daily candle right here, I was anticipating for that daily candle to I wanted the daily candle to be our today's candle. Actually, I wanted us to take out the previous day high. So this daily candle right here, based on its power of 3, you can anticipate for the previous day high to be taken. So after we take out previous day high, I was rather, I didn't want to trade any higher time frame models. So like I said, after we took out previous day high, I would switch over to intraday models. And now back to the Asian and London session. So we created a London high of day for the daily template today. So we took out Asia's highs and we took out Asia's lows. And notice how during the London session we created this, we created this hourly SIBI here. So this hourly SIBI should be respected, and this higher time frame SMT should be, influential, because like I said, this is a rather larger SMT too, because ES had already taken out previous month's high and NQ didn't. So if we are going to continue bearish, we should respect this hourly FEG. And during the stream here, I actually noted out how, okay, well, we are respecting this hourly FEG during the open, and I told myself, okay, if we take out August 30th and August 29th low, then I would stay on the sidelines and actually just close the trade or close the stream. So we took out August 30th low and August 29th low, and we showed respect to the hourly FEG, but we didn't get a entry model to target August 30th and August 29th low. So like I said, I turned off stream and then I went to the gym. So during the gym, I actually noticed there was this setup here, and this setup I didn't take. So usually what my model is here, whenever we do expand in one direction and we don't get a we don't get an entry model or a model that allows us to be part of the move, I usually tend to wait for retracements. So the very first retracement here is provided with this model. So like I said, we took out August 30th and August 29th low. We didn't trade back inside this range, we actually continued to sell off, and we created another 15-minute fair value gap. So note how this 30-minute candle closed here. We had a bearish 30-minute candle closure, and we also created a 30-minute fair value gap. This 30-minute fair value gap should be treated as a breakaway gap. Reason being is I want to see prices take out this 30-minute low first, and then maybe retrace back into here. But so we took out the 30-minute low, right? And then we started retracing back inside this 15-minute fair value gap. So I told myself, okay, if we can get a bearish reaction to this 15-minute fair value gap, whenever I say bearish reaction, all I mean is if we can get a bearish 15-minute power of 3, and which we did. So we had this bearish 15-minute power of 3, and I always ask myself, why did we create this, bearish 15-minute power of 3? Well, we traded back inside the 15-minute SIBI, and that 15-minute SIBI should be respected if we are going to continue lower. So now I'm going on to the lower time frames here, right, to find some sort of PD array that supports the idea of us targeting the 15-minute low. So on the 2-minute time frame, we had this small, but we still had a fair value gap. We had this 2-minute fair value gap here, right? And my entry model should have been at this 2-minute fair value gap, because on the 3, on the 4, and on the 5, there wasn't any fair value gaps. However, on the 2, there was. So my entry model would have looked something like this, right here. So when prices retraces back inside this 2-minute fair value gap, I would have taken my entry, and then I targeted the 15-minute low. So on the 1 minute, it's a little bit clear here, but yeah, like I said, I take my entry here at the 2-minute fair value gap low, or at the 2-minute fair value gap. My stop loss is at this at 11:22's candles high, 1-minute candle high, and I'm targeting the 15-minute low. Like I said, this 15-minute candle, there's a reason why we created this bearish candle here. We traded into a 15-minute SIBI, and on the lower time frames, there's displacement. So the reason why I didn't take this trade here is because whenever I looked at how small this 2-minute fair value gap was, it kind of like it didn't show. I don't know. I usually tend like a fair value gap for me. Like this is a fair value gap. Nonetheless, it's just a small one. But I would have preferred it if we had a larger fair value gap. And I'm being critical here. I'm being really discriminate towards fair value gaps. The size of the fair value gap shouldn't matter. I should have entered on this fair value gap. There's a fair value gap present, and the only reason why I didn't take this fair value gap is because it was small in size. That shouldn't be the problem, you know what I mean? So really good model. Targets are that 15-minute low, and notice how we are in confluence. This bearish model here is in confluence with the higher time frame model. So it's an A+ model. However, I didn't execute on it just because of how small the 2-minute fair value gap was. And like I said, one thing I could have done better was not be discriminate towards any fair value gap. A fair value gap is a fair value gap. No matter the size, no matter how small it is, how large it is. If there's a gap between 2 candles or 3 candles per se, then it's a fair value gap. And a wise man once told me, it's not about the size, or it's not about the size of the boat. It's about the motion of the ocean or something like that. But yeah, I'm gonna apply that here, and yeah. So let's get into the actual trades here that I took. And like I said, I saw this trade. I didn't take it because of how small the 2-minute fair value gap was. And like I said, I'm going to no longer be discriminate towards fair value gaps. I'm going to take the fair value gap entry if there is a fair value gap present. Fair value gaps indicates that there's displacement and willingness towards a certain level. So let's go on to the actual model I took here. So now in my head, like I said, we took out August 30th and August 29th low. We didn't retrace. We didn't get, a reversal after this. We just continued to go trade lower. So previous week's low became the clear draw of liquidity for me. So now I'm just trying to find a entry model to target that previous week's low. So my entry model here is actually based off of how we closed here on the 1 hour, the 30-minute, and this 15-minute model. So all three time frames here is suggesting lower prices, right? So there's time frame alignment. The clear draw of liquidity is this previous week's low. So now I would go on to the lower time frames to find an entry pattern to target that 15-minute, that 30-minute, that 1 hour low. And that, like I said, those lows are in confluence with the higher time frame narrative. So now I would go on to, like I said, the lower time frames, the 5-minute, the 3-minute, the 2-minute, and the 1-minute. So I believe I actually took my entry here based off of the 1-minute time frame here. So my first initial entry is at this 1-minute fair value gap. So let me put up the borders so you guys can see it a little bit clearer. But I take my entry at this 1-minute fair value gap, right? I'm entering this trade with full size because this is a an A+ setup. We have time frame alignment, lower time frame order flow lower time frame model is in alignment with the higher time frame order flow. And I failed to mention this just now, but we did create this 15-minute fair value gap. And like I said, we created this 15-minute fair value gap after trading inside another 15-minute fair value gap. And just the creation of a fair value gap in itself is a sign of strength. So I was treating this 15-minute fair value gap here as a breakaway gap. I didn't want to see prices retrace back into it. Like I said, I wanted to see prices take out the 15-minute, the 30-minute, and the 1 hour low first. So we open up at 12 o'clock. I am selling above the 12 o'clock open, and I get instantly stopped out here. So my stop loss is at the 11:56 1-minute candles high, and I instantly got stopped out. So here I reassess again. So we created this 1-minute BISI, right? And I told myself, okay, if we can get a closure below that BISI and trade back inside the original 1-minute fair value gap that I used as an entry, then I'll take the trade again. So I took the trade here again at 12:09. And when prices, like I said, trades back inside that 1-minute fair value gap, after closing below the 1-minute inversion fair value gap, I take my entry again. Original position size, original model here. Stop loss is at the 11:56 1-minute candles high, and we took out previous week's low, and then we started trading back inside this range. So this is a really good example of how I gave the model 2 chances. There are valid reasons why I took this model again. Like I said, we closed below the 1-minute BISI, so we inverted a bullish PD array, and the clear draw, the objective hasn't been taken yet. So I take the second entry. And we began to just sell off the rest of the day here. This wasn't actually, I did not anticipate this large sell-off today. We moved 733 points on NQ today. And today is a day that's right after a bank holiday. This isn't normal. I don't know what's the cause of this, to be honest. I mean, there's this, like I said, there's a higher time frame. The higher time frame is telling us that we are bullish, but if we don't respect this weekly fair value gap, then I going to scratch the idea that we're going to attack the previous month's high. But I would like to see us, if we're bearish, I would like to see us close below this weekly fair value gap on the weekly time frame. But yeah, that's gonna wrap it up for my trade recap for today. Hopefully you guys found some insight, and maybe my way of trading could have increased yours. But yeah, What I do have in plan for tomorrow is I do want to see today's low get taken. So what I mean by that is I do want to see the level 18911. I want to see 18911 get taken tomorrow. And there's actually a couple of fair value gaps that we have here. We have a 10-hour fair value gap. We will most likely create a 8-hour fair value gap. And we have a 6-hour fair value gap and a 4-hour fair value gap. You can short, target previous day low after we take out previous day low, move stocks to break even, take some partials off. But yeah, my objective coming into tomorrow would be previous day low, and after we take out previous day low, whatever we do from there, I would be just trading intraday models. But yeah, thank you guys so much for watching, and until next time, peace out. Skadoosh.